Hey everybody, just wanted to do a quick update. We've been talking a lot about the Nasdaq in our morning analysis videos the past week or so. And if you've been watching those, you know that I currently have some hedges on uh, kind of with Nasdaq. I'm using SQQQ as a proxy, and which is just the inverse ETF of the Nasdaq. Um, and I just kind of wanted to show sort of where kind of my thinking is right now on this. So, I put the hedge on kind of back here when we were pushing into this resistance zone, and then, we fell back down a little bit. Actually, I think maybe I put the hedge on this day, and kind of right off the bat, actually, it went into profit. So I was feeling pretty good. And then we started to push back up again. Maybe I should have taken the hedge off there, but I still just, the market as a whole, especially looking at like the S&P 500s, um, we've been S&P's been stuck we've been stuck here, and then we're kind of stuck here. And I know there's a lot of drawings on this; it's a bit hard to see, but um, this is back to Nasdaq again. This is the daily chart, and what I had been watching. Let me go down to like a 15-minute as we were, pushing through this. Again, this is kind of um, where my hedges was based on this broad resistance zone right here, this big rectangle. And you can see, we were kind of up there. Again, I put my hedges on, I think, at the start of this day. So it'd be like this day here is where I put my hedges on, and things were looking great at first. So, of course, by the next day, kind of early morning, we were rallying back up. I kept them on because I felt dicey about this. And sort of my line in the sand right now is, you can see I've got three lines up here. There's two of these red dotted lines and one teal line. So let's talk a little bit about what those are. If we really break those, I'm going to close out my hedge. Let's zoom out and take a look here. So what we have is this teal channel, right? So this was this sort of high point here, and then we kind of broke down all the way to here, and kind of came up, tried to make some new highs, and really just sort of flustered, right? So I kind of just have that teal line drawn off the top of this high because that's when we really started to sell off. I didn't move it up on this. I just made this new channel red. And the reason I didn't is because if you look at this stuff here on like a larger time frame, it basically looks like an attempted new high and rejection, right? So this is the weekly chart. And so we have our high, higher low, it's sort of like a weak high, but then we make another higher low, and then eventually break to new highs, higher low. And then this is technically a new high, but when you look at it on this weekly chart, you can see that this is not a very convincing new high. So whenever I see that, whenever I see a new high that's not very convincing, I like to keep my channel drawn at the top of the previous high and sort of imagine this being still our relevant range, and that this was just an attempted breakout and failure. So we can always draw another channel too, but I like to have this as a point of reference. And then the other thing that we have is those two red lines, and going back down to the 15-minute chart, just got to zoom back out. So this is that same area we were talking about. And those two red lines come from two things. So one is, let me find a good time frame to look at this with. Okay, so one is we see that this whole area that I have circled is what we would call a balancing area, right? So there's a lot of money flowing in and out of the market here, a lot of contracts being traded here, and sometimes that means that large institutions are either accumulating or distributing their inventory. And so what I like to do when I see that is I take this fixed range volume profile, get rid of some of this stuff, and I just like to capture that balancing area. Okay, and if we capture the balancing area, we see that this level was what's called the point of control, if you're not familiar with volume profile. And that means that at this like pink line, which lines up with this upper dotted red line here that I drew, that is the price level that the absolute most number of contracts were traded. And we can see that actually we have like this sort of peak of the volume right there as well, and kind of highlight. Okay, so definitely like a high volume node there that we want to be aware of. So this upper line, and the reason we're highlighting that is because if we go over to now, it's this upper line right here. So this teal one's the top of that channel we were just looking at. This upper line is that point of control from that entire balancing area. And you can see how we came up to it and rejected pretty hard off of that. This other line, we're going to put that there as well. And it's been a little bit dealt with. But if we look at this sort of movement, right, this impulse down that was created, right? So we kind of had all this balancing and then eventually impulse down. This was like the last sort of balancing area of that. And actually, I'll do this. Let me get rid of this one so it's not too confusing. If we do the same thing, right? Same thing. Let's use our fixed range profile. And let's just go in and capture like just this balancing area right here. So let's capture like from here to where it started selling off, right? And what do we see? That within that whole balancing area, which was basically what came right before the big push down, this lower dotted line was the highest value. So we have these three sort of areas of confluence. We've got this previous high, we've got this high volume node from this entire balancing area, and then the high volume node just from this smaller balancing area. By the way, this is the same deal down here, this little one. So again, if you look at this little consolidation right here, okay, see the same thing happening, and we just highlight the high volume area. And if we look at those levels and we come across, see how price came up to that level? It overshot it just slightly, right? You'd always put your stop above the high anyway. So it would look something, you know, something like this. Whoops. Sorry, look something like this. And our stop would go above that. And we can see that that was a pretty clean rejection right off that area, right? So that worked out really well for us. And then if we kind of continue along, we see price fell, and then started to recover. Started to recover. I've got so many old drawings on here because I don't trade Nasdaq that much. You know, what we see is, okay, so this is this one. And again, same thing here, right? So we captured before this big sell-off, kind of highlighted the volume. And look how this level, I can draw another line in here just so you can see. See how that level acted as resistance, right? And kind of held the market through that whole thing, right? This whole kind of zone right here. But this level was pretty key for several days. So as we came back up again, you know, just see how we're dealing with this area. These three sort of confluent zones have been pretty crucial. And what we're doing now is we're basically like we dealt with this area here, right? There's no real need to come back to it. So we can see when we came back to it again, we kind of blew right through it, which would be right here, kind of blew right through it and then came back and retested, right? Because we blew through it. Whenever you blow through a level like that without a reaction, price often is going to retest and then take off again. And where did it take off to? The next level. You can see we stopped to the tick almost, pretty much to the tick right on this candle. We first stopped there, came down, made another attempt up, right? And then again got rejected again. So with these kind of three levels of confluence right here, I'm watching this really carefully. I have my position on SQQQ, which is the inverse ETF, and I have just sort of like a catastrophic stop down here. But if this really started to look bad, I would actually consider exiting sooner. And it's just sort of like in case I'm away from the screen and the Qs start really rallying, this might drop hard. And so basically we're in this as a hedge. We want to just kind of keep it. And then if the Nasdaq falls, this might pop a little bit. Who knows? I don't know we'll do this, but you know, we do have like this gap fill up here. So we could do something like that, you know. I don't know that we're going to go up quite that high, but it's just basically, you know, as we're looking at those levels on the Nasdaq, and we've seen that, you know, essentially since mid-April, if we look at the broader market, we've just been sideways, you know, or this is actually February on the Qs. So on the Nasdaq, really since February, we've been sideways. like completely sideways. On the S&Ps, it's more from this point. But regardless, that's a lot of sideways action. And when we see that and we see we're coming into these areas of resistance, could I have waited till we got up here? Sure. But just knowing that the S&P was also really stalling, I just decided to kind of play it on the safe side, especially when we were in here. Again, my initial hedge was off of this resistance zone. So I'm underwater on my hedge right now, but I'm okay with that because it's only represents about a tenth of my account. So I'm 90% long essentially, and 10% short via SQQQ. Gives me that bearish exposure to the market. And because I wasn't sure how long I'd be holding the position, that's why sometimes I'll take it, I'll just put a hedge on with like micro contracts with futures. But if I don't know how long I'm going to be holding it, I don't want to deal with like future contract rollovers and stuff like that. So a lot of times I'll just use the ETF, the index ETFs for that. So this looks to me, looks pretty bullish, right? We had this nice rally up. This was the top of that rally, this white channel, and we've been holding above that level. So it looks to me like we could want to rally up, but again, you know, we really want to see something happen. We need to get through these levels. So if we break above this definitively, I will, like I said, I'll most definitely be closing my hedge out. But until then, you know, maybe I'll put this like that. Until then, I'm just going to hold it, and I'm okay with being in the red a little bit on that position. I can figure out where there we go, my Thinkorswim account, and you can see the SQQQ hedge is down here. I have a pretty decent sized position there. I have about 40K worth of that, and I'm currently down 3.3%, so not a big deal, not like I'm down heavily. And like I said, I'll close that out if we need to. A bunch of other positions doing really well right now. This DAC position, I took this, I alerted the members of the group to add to it a while back, and it's done nothing but really go up since then. Other positions from the group, this Riot position, we're up 30% right now. We had a nice pint. We sat on some limit orders there for entry and just waited, and that worked out really well. Nugget is our gold play, our long-term gold play. Again, same idea there. I didn't want to play it with futures because I wasn't sure how long I'd be holding it and didn't want to deal with contract rollovers. So I just went with the 3x ETF, Nugget, and UGT. Tech is another nice position. We've been up as much as like 10% on this. It's been kind of fluctuating around a little bit, but we got in really close to support, so we've haven't really taken any heat on that at all. So I'm pretty happy with that. I think those are most of the positions from the group. A lot of these are older positions because this is my long-term account. And most of my swing stuff is closed out because, you know, we're kind of sideways and we're towards the top of a range. And so until we get any confirmation of the sign that I would want to take a swing to the downside, I would actually consider this hedge to be a swing technically. But otherwise, most of my swing stuff is pretty much closed off right now. We bought, as swing trades, we bought the 2x leveraged ETFs of both the S&P and Nasdaq down here. So we rode those up and closed them out up here, and that's when we then added the hedge in. So we got some really nice gains on both of those. We also put on a bullish vertical spread on SPY down here, rode that up, closed it out for about 75% of profit. So we had some nice swing trades over this period. And right now, to me, it's just sort of, as far as swing trading goes, it's like a sit on your hands moment. The current market conditions, in my opinion, are not super conducive to swing trading. Got to be pretty delicate and accurate with your timing. So yeah, if you've been following our videos and you dig them, hit subscribe. We're really doing our best to create a nice community here and try and provide some value. If you'd like to join our trade room, you can trade with us for free. It is dpmtrades.com. We have a free trade room. We do, live trading. We can look at charts for you. We can help people manage their positions better. We do have a paid area as well if people do want alerts for our long-term and swing positions, and also access to some of the indicators that we use that we've created. But otherwise, I think the free membership is a great place to get started if you just are looking for a community and you're sick of paying for chat rooms that you're not getting a ton out of. Then just join a chat room for free, right? So that's why we do it. I'd say every video, I don't run the chat room for profit. I run it for fun and community. I trade for profit. So we just like having good people in there. It's a nice small group, and I mostly day trade futures, but I do swing and long-term trade on ETFs and stocks and occasional options as well. We do have members in the group that are trading Forex, members that are trading options. We have a little bit of things. So dpmtrades.com, but at the very least, hit subscribe so that we can help grow this channel. It's a new channel for us. And we try to post morning analysis pre-market for, usually I look at S&P 500 and times Nasdaq, particularly for those day traders out there who are scalping futures. Usually get that analysis live here on YouTube between 8:30 and 9, and kind of get you set up for the day. We identify all these key levels. You can see that the levels we identify are really good levels, right? I mean, look at how these levels play out. This went right off this level here. This level was holding as support throughout this whole thing. We ticked right off these high levels here. So you could literally trade just off the levels that we give you and be pretty successful. Of course, we try to be a little bit more refined than that. So, all right, guys, wish you the best. Hope you had a good trading day. I myself had a red day today. I was trading S&P, and it was just so choppy and flat. I was trying to do fading the range and just didn't do it too well. So I took a little bit of a loss today, but that's no problem. I'm still green on the week and looking forward to another trading day tomorrow.